Hello traders, Gary Wagner with WFGForex.com, your daily market update for Forex Gold. It is the 22nd day of July, Thursday, and this is the Daily Report. Forex Gold is currently trading higher at 1194.95, call it 1195, trading up about $8-9. It has had a low of 1180 and a high of 1202, so we still see some resistance at that $1,200 range. Again, we're running into this band of alternating days in which we have higher closes and lower closes. Again, we have an engulfing bullish pattern. That's that 2-day pattern that we tried or were hoping to see some sort of confirmation yesterday, and what we got was a lower close day, so this alternating candle did not give us our confirmation. Again, we do have an engulfing bullish. We would look for confirmation to actually signal a buy and signal an end to this A wave. As I do believe we're firmly entrenched in our corrective phase, as I have pointed out on the last couple of days, I would look for, once we signal the end of this A wave, we can do a little bit of calculations and determine what we think we're going to be witnessing, because we use A and wave 1 as kind of our benchmarks, so that in wave A we're going to look for a impulse wave, a wave up at about 50% of the move. 50 to 75% of the move down in A should be our move up in B. And the fact that we've got about we would look for about a $40 or $45 move based on the fact that you've got a little bit over an $80 move here, $80 to $90. So I'd be looking for a $45 move back to the upside, and then the C wave is typically 1.61 to 2.61 of the A wave. The C wave is, excuse me. So that we would be looking for, on that final corrective wave, it could be a significant move lower. Now, in terms of the amount or the move on C, that 1.61 is not a hard and furious fact. If we take a look back at our corrective phase that we got when we had our first record top here at 1221, this is back in December of 2009, you can see that A wave was predominantly our longest wave. We did get about a 60%, 50 to 60% move back up, but this C wave was about the same distance actually. But the key, of course, is that it did make a lower low, and that lower low took us to the bottom at about 1040. That took us into our 5-wave impulse period, and again, now we're back in that corrective phase. So traders, what are we looking at? If we get confirmation tomorrow, and we've got a report coming out from the European Union that's a stress test on the banks. They're going to be releasing the results on 90 banks that have participated in this test to see whether the European Union banking system can weather a 3% decline, and if so, it's going to be fairly significant. Really, I think that that's going to be the tell of the tape in terms of where this market moves. In other words, will it stay in this consolidation pattern here, or will it attempt to break out, form its base back at 1200, and really get this B wave moving forward? At least for the time being, it seems as though the market has been able to effectively form this lower base based on our Fibonacci retracement. That, of course, is drawn from this low here. That is the beginning of wave 1 to this high up here, 1265. At 1181, we seem to have formed pretty solid support. We do, though, have some resistance right now at $1,200. There's no doubt about that. We have had this one attempt today to trade above it, but it has not been able to close above it. And then, of course, we have some more resistance both at 1213, and that's based on our Fibonacci numbers, and then at 1218 right in this area here, where you can see that it attempted on 3 occasions to breach that area, but on a closing basis was unable to. That's where we had those double dojis and that sell down to the next level. According to Kitco News, the solid rallies in the U.S. stock indices and higher euro currency Thursday did suggest investor risk appetite has increased, at least for the moment. The euro currency got a lift from a stronger than expected Eurozone economic data released overnight. The U.S. dollar index was also sharply lower on Thursday. Of course, we had Ben Bernanke, the Federal Reserve Chairman. He was speaking on monetary policy and the economic in front of Congress. This was on Thursday, and that really provided no major surprises. His comments on the U.S. economy Wednesday and Thursday were more downbeat than many investors had expected. Bernanke did say Thursday that it's not practical for the United States to return to the gold standard for monetary policy. So we've got trading sitting in this very, very tight band. Let's see what tomorrow brings with the report that's coming out of the EU. And I think that any signs that we've got some banking weakness coming from this stress test are really likely to pop this market back up. And that's what we'll want to see tomorrow. If in fact that gives us our confirmation, we'll go ahead and enter a long position. If not, we need to wait and get solid confirmation. I do think we've got a couple of really good trades ahead of us, and that's going to be on two fronts, of course. We've got, once we have the completion, which this may be the beginning of that formation, and go into our B, I think we've got a good move up. And then I think that final C, which should take us to a new low, I would be looking at, if it's a flat wave, it's going to trade right back to here. If it's a regular, what's called a zigzag, that's going to be going to about the 1155 area. So I think we've got a couple of good trades. We just have to be patient and wait them out. This has been Gary Wagner with WFGForex.com, wishing you, as always, good trading. We'll talk to you tomorrow for the weekend review. Bye-bye.